AI bots promise emotion-free trading. So why do 70 to 90% of retail traders still lose money, even when they use them? Because automation can't fix what traders don't understand, the psychology behind the chart. Have you ever looked at a chart and felt like you had to get in right now? Or held a bad trade because you just needed it to get back to break even? If so, this video is going to show you exactly where that reaction comes from. Look at these two charts. One is over 100 years old. The other one, current, 2026. But what's crazy is when it comes to trader psychology, they tell the same story. But before I reveal which one is 100 and which one's current, I want to walk you through 5 points where the emotional trader usually makes the wrong decision. And if you're honest, you may recognize yourself in at least one of them. Let's go to the first major point. Okay, as we move to point one, remember, every trader has not two brains, but two levels within their existing brain. Level one is the reactive brain. Basically, it reacts emotionally to anything. It's really great for keeping you out of accidents, but when it comes to trading, it can get you into deep, dark kimchi. And then level two brain plans, execute. You might call it the smart money brain. So what are the two brains telling us as we approach this high point on the chart? Up over 250% from this low here. And the level one brain is telling itself, oh boy, it's going forever. It's going to the moon. I'm so excited. They're kind of like, I have to take action right now. Reminds me of that little kid in the grocery store laying in front of the candy counter, crying, whining, complaining because mom and daddy won't buy that kid any candy. Remember, our reaction-oriented brain. The level one brain takes action right there. What about the level two brain? Well, the level two brain has actually ridden most of this up to the upside, already taken out profit. Their money's in their pocket. They're patting themselves on the back. Hey, I followed my rules, and they're waiting for the next opportunity. Well, what happens as we move on down here? Let's see. Okay, at point two, you can see the price is sold off. The people who bought up here, how are they feeling right now? They're basically going through, oh my gosh, because this is probably something they've done before. And so they're going, dadgummit, I've done it again. And they're getting washed out here. The level two trader is sitting there going, well, is this a time to enter or not? No, it hasn't proved itself. I'll stay out. So a lot of the level one traders will be looking at that, and there may be a whole new batch of level one traders jumping in right there thinking it's got to run back up, or the level one traders that got in here going, oh, if I can just get back to break even. So fear, anguish are showing up right there on the chart. This takes us to point three, which is the complete waving the white flag. It's all the way over. And oftentimes these lows, like we see here, where the level one trader finally throws in the towel, quits, and basically makes the promise, I will never trade like that again. Unfortunately, that's our default setting. And it's ready to basically spring-load it, if you will. The next opportunity he has to buy is, of course, at the wrong place. Level two traders at this point is going, okay, we'll see what it does. And so clearly we go into a consolidation phase, which is point number 4 on this chart, and we run sideways for a while. What we have to remember is after this 70% drop here, the pain that the level one trader has felt takes a while to get over. And we have this nice little consolidation pattern starting. Level two traders seeing this hit a new bottom and rebound as they are using this as a chance to accumulate shares. Sell a little bit up here. This consolidation run, each one of these runs is about 100% or more. So the level two trader accumulating shares. The level 1 trader is waiting to get in there and there. And then we do the final pullback. What happens is we move into the next phase, which is point 0.5. Point 0.5 is where the price action went up and retested these past highs, got a nice little cup handle, and then off it goes. And this particular run was 265% in 39 weeks. How was the level 2 trader trading this? He was going, I have my breakout, I'm in. And then he's looking at the pullbacks to get either more shares or at the highs, take off a little bit of profit. So what is he looking at? He's seeing this as a nice controlled pattern to jump on board. Level 1 trader is scared to death right here because all the past opportunities to get at the high that messed up on him is clouding his judgment. He is scared to death, and he's both fearful of making the wrong decision, and about here is where FOMO kicks in because he's missing out on all of this trade and typically misses it all the way up until prices reach this high right here. And then they're going, guess what? Repeating the same mistakes that they made over here. They're so excited. Oh, it's going to take off and go for certain now. I've got to get in. And typically, 265% runs are not followed by real strong market action. So what does that tell us? It basically shows us that on this chart, exactly where the psychology of the chart and the emotions of both the level 1 trader and level 2 smart money trader kicked in, one with just the gut reaction, the other with a plan to make the profit, and they did. Okay, before we do the reveal, you do want to stay because I'm going to be talking about one of these charts for a potential setup right now. So, which one of these charts is the 100-year-old chart? This one up here? Or is it this one down here? Which one? Vote. A is up here and B is right here. Leave a comment. Okay, and the winner is Tennessee Coal and Iron from 1899 or 1898. Absolutely phenomenal run. And we pointed out this spot up here on the chart, right up here. That was its all-time high. Guys who bought it up there suffered a huge loss when this almost went insolvent in 1907. Well, what about the other one? What was the other stock? Or was it an ETF? Let's find out, because that's where we're going to highlight a trade that may be setting up right now. The other mystery chart was SOXL. Now, when you look at a weekly chart of SOXL, can you identify the points on the chart and the emotions that traders level 1 and level 2 may be having? Go ahead and take a look at that. Now let's jump into what's the setup potentially happening right now. Okay, as you guys know, I always start on the non-leveraged ETF as I'm looking at a potential trade. And here we have SOXX. What can we tell about SOXX? It is breaking out to new highs. The momentum has shifted back up to the upside. What's it doing, though? About, I won't say every week, but it's doing these little pullbacks back to the equivalent to the 50-day moving average. So right now, I'm in a no-buy position. What about SOXL? Similar type situation. Let's blow this up a little bit closer. As you can see, price action and the momentum is shifted to the upside. So I'm waiting for this. I'm waiting for a pullback back towards that 50. We don't know when that's going to happen, but right now, that's what I'm waiting for. And I can move, and we had a breakout right here, right there. So that's a level to put an alert. And what is that level? That level is about 240. $240. We hit that. We're going to be close to the 50. That may set us up for a run to the upside with SOXL. We were comparing this to the Tennessee coal chart that did a similar type of big run like this. How far did this run? I want to say from this breakout right here, over a 63-day period, 439%. And those of you who have watched my other video about the trade I missed, that was the trade I missed. So now, am I upset about that? No, because like my mentor used to tell me, the best trade of the year comes around about every 2 weeks. Okay, guys, with every trade I do, I am not trying to predict the next move. I'm just basically waiting for my setups to confirm. And these are high probability setups where the likelihood of a bounce is a high probability. Does that mean the trade never goes against us? No, remember, even if the probability is 70% that it's going to be a good trade, that's 30% that says the trade's going to fail. And that's okay because I have the objective trading stance that my system brings on board. And if you want weekly updates on what I'm trading and why I'm trading it and how I'm applying the process in real market condition, join the Autopilot Trading Services. A link's in the description. So watch the next video because it breaks down why your brain is wired to lose and the 5 solutions that help you start trading like a level 2 trader.